is the housing market peaked. And housing is absolutely insane.
We've had significant affordability pressures. The monthly payment for a new home is up slightly over 40%.
Interest rates are going up. The amount of offers are going down. Mortgage home applications are down 75%.
This is the first time in the last 4 years that we have seen a year-over-year increase of more than 1% of active listings with price drops. It's an inflection point.
All right, so let's move on to the purpose of this whole thing is like, what the hell is happening in the housing market? Even though, interest rates were going up and then prices hadn't come down like a whole bunch, but I ended up putting like an offer in to on a house. Was it the perfect time to buy? For me, it was, right? I didn't overbid on a house. I got the house at listing. Interest rates are going up. I didn't know like where they were gonna be. So like my opinion is when you need a house, you need a house. And then you need to make it work for you. So whether you need to buy out, like if you can afford it and you have the down payment, yes, when the rates were at 3%, I could buy a little more house. But as the rates went up, I just had to look a little bit further out as opposed to a little bit further in. But at the end of the day, what is the purpose of a house? Somewhere to lay my head, somewhere to put some money as far as an investment for retirement. And then also so I could work and then do like my podcasting and sleep and then take care of dogs. At least that's my future life is coming up. But let's look at what some other people are saying about the real estate market.
Our April home building survey really showed an inflection point of demand starting to moderate. We've had significant affordability pressures. The monthly payment for a new home is up slightly over 40%. And I think the surge in rates is now finally giving people pause. Some of it is related to just hesitancy that they don't want to be buying at the top. But I think more than anything, it's about affordability. Our survey did see a pickup in cancellation rates. Admittedly, we didn't expect much, and it's well below normal. But I think there's been so much embedded equity, so we didn't expect a lot of cancellations, but it did tick higher. We did see a tick up in incentives. And some of the cancellations, by the way, we've heard from some of the hotter markets were actually private investors. So I think you're seeing a pause. Now, admittedly, it's mixed. There's markets that remain red hot. So we're seeing an inflection point.
The question that's being asked like right now is the housing market peaked? Based on like the research I've done and like based on like what I'm looking at, the housing market has peaked. And so if you can get a good deal, right, like I think housing prices are going down. And the way I understand it, with inflation and the interest rates, that's only going to be going up. And so there's this small window. If you can afford it, once again, like look at buying a house now. And then I'll point to, right, so I'm not saying that from the perspective of have all this money, like go buy a house, right? Like that's not what I'm saying at all. I'm just saying look at some of the trends that are happening like in the market, and if you're in a position to, because private investors, BlackRock, like all these companies are buying up everything. Interest rates are going up. It's just going to be even less affordable to actually buy a house like in the near future. The good thing about now, or this specific inflection point, is the fact that it's less bids going into the house, like as Ivy Zellman was saying. And she's way richer and way smarter than me in like real estate. But you could just go on Redfin and just see like the housing prices drop. Meaning that now that there's less offers being put in, houses aren't getting bid up, 50 to 100 grand more. And so there's a chance if you can deal with a 5% interest rate where you don't have to necessarily bid up on a house and you could get it at market, even though the market might dip a little bit, at least you won't be in as much debt per se. And then if we get lucky, where the interest rates fall at some point in the next 2 years and you can refinance, then you're in a better position. You didn't overpay for the house, or you overpay slightly, and now your interest rate's low and you're in a house that you can actually afford with a low interest rate.
This is the first time in the last 4 years that we have seen a year-over-year increase of more than 1% of active listings with price drops. It's an inflection point. And this is sort of something that we start looking at and we say, okay, well, we've got an inflection point to the upside in price drops. Okay, we're starting to see that. That doesn't mean it's going to sustain, but it's just one of those early signs. It's like, okay, that's something to pay attention to. But see, real estate, in my opinion, is one of those things that in order to really understand what's going on in the market, you've got to look beyond larger statistics. You could use those as clues to either corroborate what you're seeing or to be sort of a weapon that says, no, what I'm seeing or feeling is wrong. But real estate, it's always local. However, national impacts, like interest rates going up, 3% in a matter of 4 months, will be felt in every local market. But here's some of the things that I'm seeing now. So back in January, I made a prediction that we would see excess demand in housing evaporate, but that would take time. That would probably take until the end of 2022, because you go through a cycle. First, you get interest rates that go up in January and February, and then what happens is you still have people who have their rates locked in who are closing deals in February and March. But then the people who are looking for new homes to buy in February and March, who would actually be closing in April and May, are people who say, well, I have a higher interest rate to deal with now, and rates are going up. I may as well get in now before rates go up even further. So you have this excess excitement to get in quickly, right? That's beginning to wane. First of all, the people who had low rates locked in from December and early January, that's over now. The people who are hunting in March and April, who are excited about, okay, let's get in before the housing market sees rates go up even further, they're finding places. And so now we're at this potential tipping point where the next phase of the housing market would be, well, if more sellers decide, or even a consistent amount of sellers, as in the same amount of sellers we have been seeing, decide to put their properties on the market. Even if we stay stable, if we end up with fewer buyers now who are willing to get mortgages at 6%, then you have a problem.
So let's talk about that for a minute. So mortgage home applications are down 75%. Obviously, because now that the mortgage rates are going up, people can afford less home. And some are just not buying a home at all. I think I'm at the inflection point where I was not necessarily in a rush. Obviously, the perfect time to buy a home would have been 2 years ago. I never like to be rushed to do anything. I like to think through things. And so this is one of those things where, yes, the mortgage rate, Papa Jerome Powell, when he started pushing up the mortgage rates, that definitely, put some pep in my step or put a fire under my seat or whatever analogy or metaphor you want to use. And I started to look. And so I'm locked in at, I think, a 5% rate or something along those lines. If the rate got hiked up to 7, would I still buy? I don't know. At some point, at some inflection point, you have to just rent and just wait until the market cools off.